Online sellers face significant challenges when it comes to borrowing. This can put them at a real risk of failure because they can't access traditional lending. Without access to funding, consequences can be dire. Even if you have a proven business model and growth over a few years, you may still be frozen out of traditional lending. For those that do manage to secure finance from the bank, the length of a loan and repayment terms are not always a good fit for online businesses. And the loan may be linked to the founder's personal finances, putting their finances and their livelihood at risk. Many banks see online sellers as too risky to lend to. Additionally, interest charges really stack up for borrowers. Many lenders will require collateral or a personal guarantee to approve funding. This is a common process for lending, and it's not the only way. As an e-commerce business, you should probably look for alternative funding options. You can turn to friends and family for financing your startup or business. The friends and family route is much less formal than getting a bank loan. To get their buy-in, you should draw up a business plan and the financial model of how much you need to get your business moving and a repayment strategy. Although this can be a simpler way to access cash at a fair valuation, it can severely strain the relationship and it puts your friends and family's money at risk. Investor finance, or VC, venture capital funding, is another way to get the funding you need. Investor finance is unique because it involves ownership of the business rather than a loan that will be repaid. You can finance your business by bringing on an investor or a group of investors. The investors will contribute money to finance the business, and in exchange, they will receive a percentage of ownership in the company. Investor financing can be a good option if you're comfortable with bringing in more owners and you're willing to commit to the growth goals that they stipulate. However, by accepting investors, you're giving up ownership of your company and some of the control of your business. Investors also generally invest in businesses to drive their growth. They generally won't invest to cover working capital or just to launch a new offer. Fortunately, there's another solution that can bridge the gap between what these solutions can do and what businesses need. A working capital advance may be the solution for your e-commerce startup. While working capital is not an actual loan, it affords a clever way to get funding, which avoids the pitfalls of conventional funding. Having a steady cash flow is key to developing and running a successful business. To do this, you'll need access to cash so that you can invest in more stock, plan, and execute effective marketing strategies, as well as paying for advertising and covering more general costs. This is where our e-commerce financing comes into play. At Yardline, we understand that funding a startup business can be challenging. That's why we offer access to growth capital that's unique for online retailers. We give you a cash advance on the sales that's expected in the future. You can access up to $1 million in funding that can be available in as short as 24 hours. In addition to funding, you'll also receive proprietary business optimization tools and expertise from our e-commerce team. Visit our website today and apply to get the money you need to grow your business.